Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday, we will be waiting for the following economic headers to be released: the core durable goods orders for the month of July, and the durable goods orders month to month for the month of July, and Chicago Fed national activity, and other important economic headers that's going to be released from the United States. That's all for the economic calendar. We will be moving now to have a look at the numbers. On the last trading session of Friday, we have had a trading range from 1493 to 1526. Numbers are rounded and the market is closed. Gold spot printed a closing price on the last trading session of Friday at 1526 plus. The number is rounded and the market is closed. Gold is trading in a bull trend above its all daily simple moving averages. What matters for us is the 20 days daily simple moving average is now about 1494 for any pullback, and the market is completely bullish above 1450. We are overbought actually on the weekly and monthly charts with high readings, and still good on the daily chart. For the supports 1522, 1511 and 1500, and for the resistance levels 1534.8, then 1550, and then 1576, and then 1600. That's all. We'll move on to the trading strategy. Before starting our video for tonight, I would like to clear something, that I'm open-minded to listen to the other opinion, and I hate actually to let people down. Some of the channel members have been lately criticizing me for being extremely bullish on gold, which may hit to 1000 according to them. I made a couple of videos dedicated to explain my reasons, which I believe it's a long-lasting in nature, and it will help gold to keep rising, or at least it will minimize the risk of a catastrophic end of this rally. Some members still see me as unflexible simply because they are lazy, in my point of view, to understand the big picture, which I made it very clear so far. I find myself unfortunately forced to make it clear. Dear, you are here to learn, not to teach, and if you found a better content, you better unsubscribe. As I said in our last video, the Federal Reserve Bank is going to cut interest rates. Don't get fooled by the fancy suits or the academic background. They are not in a place to choose. The yield curve inverted 3 times in the last week, and on Friday we got an inversion with a close for the first time. If the Federal Reserve Bank got the job to do is to prevent the yield curve from inverting. As I said, they have two choices: either to bail out the US dollar, which is on a life support and strong because the other currencies are weak. By then they were going to create a recession and they will default the government, which is very good for gold, or they will bail out the government by lowering interest rates, and by which they are going to weaken the US dollar and create an inflation. Also, it's very good for gold, since gold is a hedge for inflation. Bottom line, no matter what they are going to do, they are not capable of hurting gold. Even if they will jump their butts upside down like a monkey in a circus, they cannot cause any damage for this rally. And as we said also in our last video, that the US dollar and the US equities both are on a life support, and when the life support was removed on the last Friday, both melted down like a cube of ice in the heat of the Sahara. Gold, the enemy of the state, did rise and slaughter the last of the sellers. The problem in this market that when you make the wrong decision, you lose twice. You lose your money and you lose the opportunity to make money since you've picked the wrong direction. Open up your mind. There is no sense that the government of the United States keep borrowing money at a high interest rate while other countries and big countries like Germany, like other countries are borrowing right now at zero or even at negative interest rate. And that's why, like all of us have seen on the last Friday, Donald Trump lost it because he's like in a fight with a fancy gun but without bullets. I feel for him actually. May he has already overdone it since China increased tariff on $75 billion worth of products imported from the U.S. He should an executive order to all U.S. based companies that do businesses with China to withdraw from the Chinese market immediately. This is a war declaration, in my opinion. And the gigantic companies in United States, like Apple, for example, they have a strong supply chain. It's well established in the Chinese market. It's hard to remove it overnight. All of this is going to leave a very bad or negative impact on the economy of the United States. Uh, uh, Expect actually, I don't rule it out that maybe Donald Trump will use the emergency state law to remove Jerome Powell from his position as the head of the Federal Reserve Bank. In trading, you need to study fundamentals. This is 90% of the job. Then you have to look at the chart for the entry, the proper entry and the proper exit. Anyone who played gold on chart only lost either the opportunity to make the money or lost his own money itself. Don't tell me that the cycle topped. Maybe you topped, but the cycle still could be expanded. Gold and silver trading in a bold trend, as I said, with a close above 1520, 1600. There's nothing between these two figures but a thin air, and this thin air is located at 1576. If bulls can take it, they can bash for 1600. For silver, I think it broke an ascending triangle and it's en route for 1850. They because since they are both both, maybe they could fall in a correction, but this is not a change of the outlook, but it's just a profit taking. Forex trading is risky. There is something wrong with anyone who thinks that trading Forex is a risky-free game. Any business in the world does have risk, and this risks range from a partial loss of capital to a complete loss of capital, which is referred to usually as a default risk. Uh, Here, I advise you, if you want to trade gold or you trade anything in the Forex, maybe you get yourself an advisor if you are not that much competent or does lack some skills. Also, I advise you to buy some real physical gold. If you'll check the description of this video or of any of my videos, you will never find a link for a merchant that he sells gold or silver. All what I'm telling you is out of pure concern, because soon if gold could make it to 1600, the rotation power will be like $100 worth of volatility, something you can't trade on a Forex account. Always keep a good relationship between your margin requirements and your account equity. If you have a long-term perspective on investing, load on some euro, dollar is going to fall heavily like a stone. Uh, Europe is not in a better shape or a better place than the United States, but they have no denial issues. They accepted the fact that of the slowing down of the economy or the recession, and they are working on it. Um, Someone might say that the U.S. economy is fine. I would say no, it's a big no, it's not fine, and it's going to collapse because it's an institutional economy. Institutional in the sense that it's made up of a huge gigantic companies, which is right now having concerns about the growth slowdown, about recession that could hit, and about in general the trade war and its implications. So the reaction will be to start firing, stop hiring, delay expansion plans, eliminate expenses, and this is all is going to be reflected in the economic data which is produced, and we are track it on daily, weekly, and monthly basis. So soon, in a month or two, before 2020, you will see that the data is coming from the Europe is better than the data that it's coming from the United States, and there will be the switch, in my point of view. Now your playbook for trading gold and silver for the coming period. The market is most likely not going to collapse or fall. So your bottom is 1490 or 1450 max to max. Bulls are not going to let go 1450 whatsoever. So try to buy the bullbacks and look for more gains, because the outlook for the international economy is bearish, and this is bullish for gold and silver. So this is how you are going to trade gold for the coming period, whenever there is some sort of wishful thinking or some sort of hope in the other markets like equities or like bond market. Gold is going to give up some profits. That is a tip that you have to buy, because it will go up again. That's all for today. Thank you guys for watching. I will see you tomorrow in another video.